Hello, welcome back to my channel. My name is The Masked Toddler, and without any further ado, let's just get into the video. So in my last video I said I got out of the market in February. You might be asking why. Was that early? Was that late? Was it luck? It was early, and it wasn't luck. I got out in February for just a few key reasons. Let me start with this. If you look over here, Elon Musk is the 6th most followed person on Twitter right now. But despite only being number 6, we hear a lot more about Elon Musk than we do about Ronaldo, Rihanna, Katy Perry, Justin Bieber, about any of these people really. I hear about Elon Musk in the news a lot more than any of these people. In February, it was announced that Tesla had bought 1.5 billion, with a B, of Bitcoin. So somebody who everyone knows is buying into Bitcoin at the top of the market, basically. That's the sign that the market has topped out. Now, crypto is a hype/emotional market. It does have long-term use and potential, but it runs off of emotion. And you can be correct in predicting charting and TA, but the more often you do stuff like that, the more often you're going to be incorrect. It's a lot easier to predict prices on a macro scale than it is to predict the paths that charts will take. Bitcoin controls the market, as we're all aware, so when Bitcoin hits a bear market, the market stops and the alts will start bleeding out against Bitcoin. And if you look at history, every time Bitcoin's gone through a cycle, Bitcoin has dropped somewhere between 80-85 on an average % of its top value. So here's where things get tricky. If we start to understand, and it becomes common knowledge, that Bitcoin drops around 80-ish% every time, who's to stop the whales from coming in and buying the bottom before it hits 80% and stopping it early so they get the best buying opportunity and they cut you all out? We don't know what will happen. But we do know that when Bitcoin hits a bear market, it's better to be out of the alts, and if you're going to stay in crypto, be hodling Bitcoin and possibly Ethereum. I just wanted to take a quick moment to go ahead and say please leave any questions you'd have in the comments. I'm here to educate and help everyone have a better experience. I believe crypto can be emotionally tolling if you don't know what to do, and if you don't have a plan, which you absolutely need to stick to. Otherwise, you'll likely fail. Now, in the last video I said, is it too late to be making money in crypto? And then I mentioned shorting the market. That's a very dangerous game. I personally don't play crypto options, but going long on crypto would be a lot easier than going short on crypto. That's not something I would suggest anyone try. Now, when I say it's not too late to make money in the crypto market, what I mean by that is you are early to the next cycle. Don't give in to the hype cycles. If it's going down, it's over, it's done. Those are the times you buy. People are most emotional when the market's going down and don't want to look at it anymore. You are early, let me repeat that, early to the next cycle. So you can make money by dollar cost averaging on the way down. Obviously, you kind of want to plan it out and know what to look for and how much you want to buy and choose your coins wisely. But you are early to the next cycle, and that's how you make your wealth. You be early to the cycles and early to the exits. Don't ride the hype waves. Don't stay in for diamond hands and laser eyes. It's too late if you're a part of that. You need to be early to both ends of the market. Now is an excellent time to start, in my opinion, contingent upon a recession not killing crypto, which we will talk about in just a minute. We are entering a very important window of dollar cost averaging. Now, crypto, Bitcoin was conceived around 2014. Crypto has never been through a recession. We could see it completely decouple from the market and just go for a blast. But we don't know. We could also see it sink to lows that we have not seen. This is the biggest risk in the crypto market right now. If you want a dollar cost average on the way down, you need to understand that we are most likely in a recession. I mean, we're probably there now, but we are most likely in a recession for at least the next year and a bit. Crypto's never been in a recession. You could dollar cost average and still lose 70-80% of your money if this recession really takes a toll on the market. But the thing is, You're holding an asset. You need to know that when you dollar cost average, your dollar value will be going down. But that's okay. It's a long-term game. You don't need to look at your dollar value. You need to look at your Satoshi value, which is for another video as well. Let me just comment on that real quick. If you really want to be serious about making wealth in crypto, not just in dollars, but in crypto, you need to do your trading pairs in Satoshi values. Now, what does that mean? That means don't go looking at XRP or Cardano or Ethereum as dollar values. Compare them to Bitcoin in Satoshi values. When those charts on those altcoins are going up, you want to be in those coins. When they're going down, it's better to be in Bitcoin. Now, if you're a long-term trader who's building a portfolio that you'll keep for the rest of your life, or the majority of it, you don't need to worry about that. But if you're going to have a short-term view on the market, you need to be looking at your Satoshi values, not your dollar values. Now let's go ahead and look at some of the coins in the market right now. XRP is a difficult one with them being in a lawsuit, because if you look at this chart here, we've basically been hitting this resistance line, breaking above it, coming back down. Now we've made it support and we've just been grinding on top of it. We haven't flown off to the upside at all. The chart would mean that XRP could fly off once their lawsuit's done, but it could also mean that XRP is not included this go round. So that's just something to watch for to mitigate your risk, or to possibly play on when the lawsuit's over, because I'm sure there's going to be some volatility there. These charts here are representing the macro perspective of where these coins could go. XRP, for example, has all this upside potential in here. My personal way of trading this market is anytime we're above the 168 and beneath the 361, this is where I sell. I'll start setting legs to sell as the market is moving up through these ranges. If you're waiting for here, just below the 4236, and it only tops off right here, you're not selling your bag. You're selling at a loss now because you waited all the way up here. Well, not a loss, less money, which we're trying to maximize our returns. So it's best to set your targets and then sell off in legs as it gets to your target to capture as much profit as you can. Now, let me zoom in here and you can see XRP is very close to its bottom. Very, very close to its bottom. This is why it's a great time to dollar cost average if you have a long-term perspective on the market. Let's look at Polkadot here. I'm only going to show you coins that I personally believe in. Not that this is financial advice, just coins that I know have a good community behind them and a good product behind them. You don't want to put your money in something you have no clue about. Now, if we look at Polkadot here, you can see Polkadot is also very close to its market bottom. Now, I've put this all the way down to 0, which I'll start doing on all these charts just to give you a perspective. Because these coins aren't going to go into the negative, they can only go to 0. We are in the red right here. If you don't know what this is a Fibonacci retracement. This shows you the resistances and supports that coins will go through. Right here, we are in the red. And I've put this down to 0, so you know we can't go below this. Obviously, we could stop above it, and that would help us set our price targets up here. But just for the sake of this video, this is as close to 0 as we're going to get. Right? Obviously, it's 3 cents, but still 0. We are in this range right here, which if we were in an upward trend and we were in this range, this would be bad. This would say we're going to break down further, but we've been breaking down and we're already in this range. This is the optimal area to be dollar cost averaging. This is how you're early to the next markets and early out of the next cycle. Now here we have Chainlink. Even if I've got this resistance line right here so you can see that it's tapped it a few times and broken underneath it. Even if we moved this down to 0, you can see we're still in this red range. So as long as you have a long-term perspective on the market, this is the best opportunity to be buying with the understanding of your dollar value will still decrease. It will come back and you're holding an asset, so you're not technically losing your asset. But this is the best opportunity to be dollar cost averaging right here in this red. That doesn't mean we're going to go that low. We could stop off right around here. But just for the sake of investing and dollar cost averaging and blah, 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 this is pretty close to 0. We are in the range now. These are the buying opportunities for the next cycle. When people say, man, if you bought here down at this low and you sold here up at this top, no one does that. But this is how you get close. Okay? Now, once these coins have made their bottom, they've broken up above the resistance and they start going sideways or climbing over here, that allows you to adjust this and get your target set for the next cycle top. So let's say that Chainlink comes down to $1.90. So let's say we bottom right around here, we come up on top of our resistance, and we start moving. That would suggest that Chainlink has the ability, not that it will, but it has the ability to go upwards of $216. That doesn't mean you should be waiting for that price. Like I said earlier, you should be selling here and here and here. But who doesn't want to be buying Chainlink for anywhere near these prices and selling for over $100? That's still an immense return that you don't see typically in the stock market. Let's move on to another one. Here we have Cardano. As you can see, Cardano is also in this range right here. The dollar cost average opportunity of lifetime range is what I'm going to call this. Now, I've set this bottom for 27 cents. That doesn't mean it's going to go there or not go there. I'm going to start moving all these down as close as I can to zero just for the sake of the video. Even with this bottom being zero, saying these coins have completely lost all value, which we know they won't, you can see that we're still in that dollar cost average range. This is where you want your money to be buying. Now let's say Cardano bottoms off somewhere around 30 cents. Which if Bitcoin's going to lose, what's Bitcoin at? 30,000. If Bitcoin's going to lose another 50%, this is going lower. This is going more than 50% lower. This could be 17 cents. Let's go ahead and say for the sake of this video, we hit 13-ish cents. Okay, if you're lucky enough to buy that. You'd want to be setting your buy triggers down at these prices just in case. That means we have the opportunity to be selling Cardano anywhere from $6, $8, $11, $12 or more. This is your buying opportunity. This is how you generate wealth. Let's move on. Now, here is what I was saying earlier about looking at your coins in Satoshi values. This is Ethereum against Bitcoin. Anytime this is going up, you want to be in Ethereum. You're growing more wealth being in Ethereum. As soon as this starts coming down, you want to be in Bitcoin. Right here is where you'd want to be in Bitcoin if you were a trader on the short term. We're coming up, you want to be in Ethereum. Back down, this whole time, your value would have been preserved best if you were in Bitcoin. We came up here, you wanted to be in Ethereum. We've been moving sideways in this channel for quite some time now. Let me pull this channel down just a little there. Now, if you look over here at the end of this, we've fallen out of this channel now, even if I bring it down just a little here to fit these other wicks that have come out. You can see we are still below this channel now. We've just barely started squeaking out of it. We're most likely going to be coming down, which means the value will be in Bitcoin. Or the preservation of crypto wealth, not dollar wealth, crypto wealth will be in Bitcoin. One thing this does kind of let you have the idea of, though, is you can see as Ethereum smacked up here, that was our first resistance. We came down, didn't get close. We've been scraping along the bottom here as support, and we've come up again. And it looks like we're making a new support somewhere around here. So if we do start seeing these new areas over here, we could see Ethereum take over quite a large chunk of the next market cycle. Now let me show you how we can get a macro perspective on the market and how the whales do this as well. Here's Bitcoin, came out somewhere around 2013, not 2014, excuse me. But you can see here was our market top, here was our market bottom. That let us project somewhere in this range as the next market top. Now obviously as you look up over here, we blew past that. We absolutely decimated that target. That doesn't mean we're going to do it the next time, but we absolutely destroyed that target. So then here's our next top. We go to look at this one. You'll notice we didn't crush our targets this time. That leaves the question of diminishing returns in Bitcoin as it becomes more stable and more adopted. Another thing I'd like to show you, so you can understand how the whales have a perspective on the market. We're going to take the price ranges here from these tops to bottoms. From here to here, we're looking at about an 85% drop. Okay? Let's look at the next one. This was the 2017 cycle. Here's about our top, here's our bottom, 84%. So we've been sticking pretty close to that 80 to 85% range so far. Now let's look at this one. Let's get a top on this. Let's go ahead and get an estimate of where we think this bottom would be. So if we were to drop 80%, that's 13,500. If we were to drop 85%, I'll call it 84.9, we could drop down to $10,000. Who wouldn't want Bitcoin at $10,000? Everyone would. And because whales and other accumulators know this, we might not see these prices. As great as these prices are, and as nice as it is to have history as a guide, we might not see these prices. There's only somewhere beneath, actually, 21 million Bitcoin that will ever be in existence. 21 million. How many people do you think want a piece of a Bitcoin? And how many wealthy people do you think are in Bitcoin? I can tell you right now, it hasn't taken over. Just because it's talked about doesn't mean that these millionaires and billionaires have a piece of Bitcoin. There's not going to be enough for everyone to have one, okay? So as we're getting down here, we could see whales start to basically form their own bottom and say, nope, you're not getting the buying opportunity down here. We're not going to let it get to 15 or 10 or 12,000. We're going to stop somewhere around 20 and call it good. You missed out. We don't know what's going to happen. It's very hard to predict bottoms and bear markets. They're a lot more difficult to chart than bull markets. Now, something we haven't done here is looked at Ethereum. Ethereum lost somewhere around 70% of its value this first cycle. The next time we came down, we lost 94% of Ethereum's value. Okay, so obviously that's a bit of a difference there. Between 94 and 65%, we're just going to play a game and we're going to call it 75%. If Ethereum loses around 75% of its value, this is our bottom. Obviously that's not super accurate, but our bottom could be somewhere around $1,000. And if that's the case, we don't have much lower to go. And once you start to figure out how much these coins are going to lose, this allows you to project the next market cycle. So let's go back at Bitcoin and I'll show you what I mean. If Bitcoin were to drop somewhere around 85%, we would take our Fibonacci. Make sure I'm getting the right one here. We would go from our top down to our projected bottom. And these are our next targets for the market cycle as we're buying these bottoms. We don't give in to the hype. We don't buy with the wave. We get in early. You get out early. That's how you make your wealth. You could have the opportunity to be buying Bitcoin under $20,000 and either, if you're a long-term person like myself, just holding on to it, or selling it for more Bitcoin for the next market bottom, if you're that kind of person. This is a long-term game. You can avoid capital gains taxes by playing this game. You can still sell your projected tops and buy your projected bottoms and avoid any of the short-term capital gains tax you would pay, because this is such a long cycle game. Let's go ahead and look at someone who's been doing well but hasn't been sued or anything. Let's say that Polkadot loses, what's a good number? 85 to 90% of its value. Oh, you know what? It can't. It would have to go negative. The only way this would work, hold on, sorry, close enough, right there. This is as close as you can get to a bottom. Polkadot is an absolute buy in my mind right now. We don't have another 80% to go. We've already lost so much of the value. If this is our bottom, this lets us project our next top. Obviously, our bottom's not going to be down at 0 or 33 cents even. But look at these opportunities here. You could be buying your Polkadot or whatever coin you want at these prices all the way down here, in this case sub $10, and selling these coins for over $100, over $150, possibly even over $200. This is how you play the crypto market. Now, if you're going to be in the market, you cannot be following the wave of hype. You need to be looking at the market narrative and observing it as an outsider, like you're reading a book. Like you're playing a game of chess against a blind enemy, and they're much smarter than you. If Tesla's buying, and everyone knows what Tesla is, who Elon Musk is, and they're buying, that's probably as big as the news on Bitcoin and crypto is going to get. That is your signal that the market is topping out. You want to be buying your Bitcoin or your crypto when the market is garbage, it's for losers, and it's over with. You want to be selling your crypto when everyone's talking about buying and how it's going to the moon and we should be buying dips for El Salvador, all of that. That is all to provide liquidity for them to leave. You don't want to be there then. You want to get out before then. You don't want to get trapped in the whales' games. This is how they manipulate the market. Let's take a peek at one more. Let's look at Cardano here. Now, with where we're at right now, we've already lost somewhere around 86 to 85% of Cardano's value. Altcoins lose value more than Bitcoin. That's something you need to understand right now. If you want to know why, it's because Bitcoin is the tried and true crypto. It is the blue chip. When Bitcoin's going down, people would much rather be in the blue chip than some coin they're not sure of. People would much rather buy Bitcoin at a discount than buy Cardano or XRP or Polkadot at a discount. That's just how it works. Now, if we said we only lost 85 or 86% of our value, that's our bottom. But if we came down here and we lost somewhere over 95% of our value, which really isn't that much lower from where we are right now, that means you can be selling your Cardano sub 40 cents at purchase, up here above $5, above $8, possibly above $11. Those are insane returns. What you do with that money is you then take a portion of it and you put it into your long term. You buy some Bitcoin at the bottom. You buy some Ethereum at the bottom. You put those in your IRA, whatever you want to do. This is how you generate your crypto wealth. You're still new to the market. It's still a new asset. You want to be a rich old man who's a whale in the markets? This is how you do it now. This market is new. For most of us, it's too late to be a whale in the stock market. It's too late to go be Warren Buffett. But you're still early to be the Warren Buffett of crypto. Now, as far as myself, just for clear-cut transparency, I will tell you the coins that I am personally looking at purchasing and dollar cost averaging into as the market still continues down. And let me tell you something. The Fed is intent on raising rates. And if they keep doing that, it's going to keep strengthening the dollar. They're sucking liquidity back out of the market. It strengthens the dollar. That will keep pushing crypto down. So yes, we still can keep going lower and most likely will. Now, a large portion of my portfolio, as I dollar cost average, and this is going to be in my long term, I have two separate accounts. I have my long-term account and I have my short-term account. The largest portion of my long terms are going to be Bitcoin and Ethereum because they're the blue chip. If you want to play this game right, the largest bags you have need to be the safest opportunities. Otherwise, you're just gambling. And that's not what we do here. We invest. We look at clues. We make plans. Gamblers just hope. We're not about that. Now, the more medium-sized bags in my portfolio are going to be coins such as Chainlink, Atom, Polkadot, BNB, Crow, Voyager, AVAX, Elrond, Cake, XMR. Why? Because these have all been coins that have been proven to have a following, to have a product, to be working on improving their products, to be growing their partnerships. Go take a look at Elrond's partnerships and tell me that that coin is not going to keep climbing. BNB Crow and Voyager. There's going to be more of these types of coins, but these coins have platforms backing them. They're not just coins that are working in a decentralized organization, whatever. These are coins that have exchanges that they operate with. These coins already have current use. Obviously, they all have use, but these coins are being used on these exchanges. So you know that these coins are going to continue to climb. That doesn't mean some of them are going to do great. I would much rather have BNB or Crow or Voyager over, say, Pancake or Uniswap. But that doesn't mean that they're not good opportunities. Next, I'm going to move on to my smaller bags. These are the ones that I have faith in. I think they can do well and provide great returns, but they're not tried and true enough yet for me to allocate larger portions of my money. This is coins like XRP, Cardano, Polygon, Mana, GRT, Algorand, Stellar Lumens. Now, some of these coins I've picked because they work along others, like Matic or GRT, working with Ethereum, or because they are easily the best way to send crypto. I don't send crypto with Ethereum. I don't send crypto with Tether. I don't do that. If I can send my crypto on Stellar Lumens and have it there in a matter of a second, I'm not going to lose any value. If Stellar Lumens happens to be plummeting, I can wait a minute and sell as it comes back. It doesn't go straight down the whole time. Now, as I've said earlier, you will lose dollars when you dollar cost average. That's just how it is. But you're not in this game to create dollars. You're in this game to grow your crypto bags. That's how you really make wealth. You need to be growing your Satoshis, not your dollars. In my opinion, this is all the exposure one person needs to the market. Those coins that I've listed, that's all I need to generate wealth. Those are the safest without being too risk averse. Buying S coins, dumpster coins, garbage coins will not make you money. Yeah, there's that one guy who bought that one thing that's now a billionaire. That guy could have been an inside trader. That guy could have been lucky. You are not going to get lucky. This is not the lottery. This is investing. Do not dumpster dive. Don't do that. As Bitcoin gets below 20,000, I'm going to start averaging in on my Bitcoin. There's really not much lower it can go from there. Yes, it could lose possibly up to another 50% or more. We've never seen it in a recession. It could lose more. But you know what? I'm happy waiting out below 10,000 to sell absurdly above it down the road. You can still be buying low and selling high on a macro perspective, avoiding as much taxes as possible, and using that money to exponentially grow your Satoshi bags. For those of you that don't know, a Satoshi is a fraction of a Bitcoin the same way a penny is a fraction of a dollar. You don't want to be growing your dollars, you want to be growing your Satoshis. Now, doing this on a macro perspective allows you to snowball your crypto wealth and get it growing quicker and more exponentially. If you gave yourself 2 to 3 cycles of doing this properly on a macro perspective, the most it's going to cost you is your time. This isn't just a money game, this is a time game. This doesn't happen instantly. If you gave yourself 2 or 3 cycles, you're looking at 10 to 15 years. I understand that's a long time. But in that time, that could be life-changing wealth for not just you, but your family, your children's children. You could set your family's name up for the rest of their lives. If you did this correctly the first time, you could have enough money, enough profit, I should say, in your bags to not even see red the next market cycle when it goes down. You could stay in the green for the rest of your life and just watch the green keep going up and down. Now, you don't lose if you don't sell. I understand seeing your dollars going down is horrible, but as soon as you sell that asset, you've accepted that loss. If you believe in the asset, which you shouldn't be buying coins you don't believe in. If you believe in that asset, when you're buying down lower, all you're doing is rewarding yourself for your patience. Very generous rewards. But do not invest what you cannot afford to lose. Let me say that again. Don't invest what you can't afford to lose. You still need to eat, you still need to live, you still need to have money to have a roof over your head. Now, if you're going to be playing this crypto game right, this is also a subject for another video, you need to be using wallets. Not just a wallet on your phone, but an offline cold storage wallet. Maybe 2 or 3. But that's the best way to preserve and protect your wealth, especially as that money starts growing. There's only so much you're going to get reimbursed by MetaMask or Coinbase wallet or whatever if that money's stolen. They're not going to give you the full amount back. Coinbase just recently came out and said if they go bankrupt, they have the right to keep the coins that you've left on their exchange. Don't leave your coins on exchanges. You forfeit your property by leaving your coin on an exchange. Take it into your wallet and keep it as yours.
So that's it for this video. Sorry for the poor audio quality. Still troubleshooting some equipment, but we'll get it taken care of. I hope you learned something. I hope there's something in here you can take with you along your investing path. And I hope to see you again in the next video. Thank you for watching. Bye-bye.